So let's chat about the macro health of the market and whether or not there could be a credit cycle pickup that one could see in 2020. We've got with us Shreyas Devalkar, Senior Fund Manager, Equity at Axis Mutual Fund, joining us on the show right now. Shreyas, hi, morning. Good to have you on the show. Just understanding the texture of the market, the market prices are indicating something, the sentiment being something completely different, and the macro reality completely, a different story altogether. Would you say that at least the budget event, and then after that, the credit policy is now behind that, and is what the market price telling you what sentiment is going to be following?
Okay. Good morning. See, as far as markets are concerned, actually we are actually trying to correlate only with budget. I would like to highlight one fact that market was actually flattish till corporate tax rate cut, and since September onwards, actually market has been in positive mode. And since then, the point is government has taken various action along with RBI to trying to stimulate the economy, trying to bring the level playing field for some of the corporates, and that's where some of these measures were taken. In that context, market has been going up, and I would say again market had its own expectations around budget, but point is whatever was done given the fiscal constraint was expected, in my opinion. So I don't think there was any disappointment per se, which everyone tend to believed on the day of budget. That was not the case, frankly, or during the budget as well. So the market sentiment is mix of these since September various policy measures being taken, along with in various sectors now the base effect is being formed. So if you take, I'll give you example of say auto sector. So the four-wheelers, the base effect was formed somewhere in September, October, and then the sector has done well since that. So the stocks are up almost 15-20% from the bottom. Similar such things are happening in many cases, especially in mid caps. If you notice that on the base, some of the mid caps are showing good results. It is very too early to call out it as an upward trajectory, but there are signs of bottoming out, and that's where market is cheering in on the stock specific basis. When it comes to macroeconomic indicators, obviously they will follow in times to come. But again, going back to the same thing like autos, where you get monthly number, where you are seeing those base effects at least playing out, at least in the four-wheeler case. So similar such things are actually helping the market. Along with we have seen couple of global events as well, and because of which the crude oil is low. As we are aware, the lower crude oil has been always positive for India. That has actually added to the further positivity to the market. So all in all, it has been culmination of multiple things which has led to the positive sentiment in the market.
Okay, fair enough. In terms of the kind of trajectory you foresee for the year ahead as well, do you expect to start seeing that pickup on the back of accommodative policy stance? Do you see, improvement in the credit cycle going forward?
The credit cycle has two parts to it. One is the retail credit, and other is corporate credit. As far as the retail credit is concerned, it was actually has been good. If you take whatever time period, it has been growing upwards of 13% odd. If you take even 5 years CAGR, 10 years CAGR, it has been delivering on that. So the retail credit cycle has been good. It is the corporate credit cycle where we have seen some bumps, and it has not been the recent phenomena. It has been for last many years. Now, in corporate front, there are again, if you look at whether corporate want to leverage and wherever they want to leverage, in certain businesses, you are actually seeing that the bankers are ready to put in money. post IL&FS crisis, actually there has been certain level of risk averseness on that front as well, and that's where we have seen some sort of polarization happening on credit front. But I think with overall interest rates coming down at the headline level, and RBI along with government taking various measures to see to it that the transmission is smoother and it happens at the lower at the longer end as well as the of the curve as well, and as also in the corporates which are actually having good lending practices. So because of multiple things, I think that should ease out in times to come.
Fair enough. So you've also mentioned how the hits of 2019 are like to sustain. Talk about that a little bit in terms of where you see the potential and what you're bullish on going forward.
See, we have always been positive on B2C and consumption space, and in that it has been, as I was also answering on the retail credit growth front, so it is right from retail credit growth which drives consumption to it can be retail companies, it can be footwear, it can be jewelry, it can be anything. You can it can be staple, soap, it can be various such things, including four-wheeler. So it is four-wheeler and two-wheeler. So it is multiple multiple choices you have in consumption, in which there can be some segments which go through cyclical slowdown. And generally it becomes very difficult at that point in time to judge it whether it is cyclical or structural, and we tend to label it as a structural. So as long as we try to segregate these parts and try to get those cycles right, I think the story should be mostly in consumption space, the way I defined it, right from financials to staples.
So financials and staples it is, that's pretty much clear. Do you also expect to see that rural recovery coming in and earnings growth on that front further driving some of those staples, Shreyas? Do you see a multifold effect there apart from what we've been seeing of late?
Yeah, definitely. So there has been expectation that probably by November, December of last year, some cash would come. But then now Rabi being good, the expectations are around March, April time period. So by that time, the more cash comes into the hand of rural India, that should drive rural India as well, along with various again measures taken by government on various policy fronts. So it would be mixture of both, and that's where we expect that rural also should come back in this calendar year sooner, I would say.
Okay, fair enough. Thanks so much for joining us, Shreyas, on that.